Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a look at today's action, where we saw, modestly mixed indexes, but our eyes turn to tomorrow, to the Fed decision. And I guess the question now is, Ed, how much of that news is already baked in addition to what actually is going to happen tomorrow?
Yeah, it's hard to know what's been baked in. It doesn't look like a particularly positive environment for stocks, no matter what the Fed does
Right.
tomorrow. But we do want to take a look at a few stocks that are sort of holding up there: Cheniere Energy, Li Auto, and Dollar Tree.
All right, analysis on those three stocks coming your way. But first, let's take a closer look at the major indexes today. So the NASDAQ in positive territory, but up just 0.2% after 3 big days down. We also had the S&P 500 down about 0.4%, the Dow down about 0.5%, and the Russell 2000 down by 0.3%. So today it doesn't seem like a make or break either which way, Ed. The trend is definitely still down, and some heavy losses in recent days.
Yeah, you can't balance out a narrowly mixed day in light volume after these huge sell-offs we've had to new lows. It's just, there's nothing really that positive. Even if the market rallies on the Fed news, that would not be enough to signal a real change in character. We need a lot of repair work, and even if we get bullish signals the follow-through day, even then investors should be cautious that it might be a short-term rally. So, investors, this is not a time to be brave. It's just a time to be staying on the sidelines. Okay, maybe if you have a long-term holding that you decided, I'm going to hold it. Or if you've got some positions in energy that are working, even then in these situations, you might want to be thinking about partial profits. You have to think about eventually an exit strategy. But it's just not. It is definitely, we are in a bear market for the NASDAQ and the S&P 500, and investors have to know that.
And let's also take a look at the S&P 500, down, looks like off lows, but still it's a tough week so far, tough couple of weeks. Big resistance like we talked about last week at the 10-week line, further declines today, putting the S&P at its lowest levels since early 2021. That's a huge decline.
Yeah, huge losses. When you think about how many energy stocks are in the S&P 500, sort of propping that up, and the broad index is really reflective of how weak things are. It's just a really sharp downtrend. You're right. The reversal from last week, just tells the tale. Whenever we rally, it's for short term, and it just lures people in to have something like this happen. It is just not a good situation.
Yeah, as you said, the best place to be is on the sidelines right now, no doubt. And let's take a look at the Dow and the Russell 2000 here briefly. You can see it's the same story. A lot of damage after last week's resistance at key levels. The Dow, making its way to that 30,000 mark, and we also have the Russell 2000, which the IWN ETF tracks. It's also testing lows. It didn't, like the other major indexes, it didn't undercut its earlier May lows, but now is testing that level.
Yeah, it did get underneath it today. So, just one more piece. So that is now below.
Yeah,
and it's actually at the lowest level since, it's back to its lowest since late 2020. It's back below the pre-COVID lows. If you were looking for resistance areas for the NASDAQ or the S&Ps, you might think, well, we might go back to levels like what the Russell is doing now. Doesn't mean you have to stop there. The Russell could keep falling. There's been plenty of support levels these indexes have fallen through, but this is all the way back to that level. So that is, that's quite a ride.
Pretty sobering. Let's also take a look at our good friend, the 10-year Treasury yield. We check in on every day, continuing to skyrocket here, Ed.
Yeah, just surging. It's amazing just in 3 days, but really over the last several weeks, ever since it hit the 50-day line, and really, back from late February. It is doubled since late February, basically. So that is, one was 1.68. So that's more than doubled. It's at an 11-year high, and it's sort of not slowing down. So, it's over that 3.25. It's now moving up. It's got a few more levels here, but really a change in transformation. Obviously, the Fed is raising rates, inflation. I'd say something else. Despite this yield rising, the 2-year yield is nipping on its heels. We don't have that in here, Market Smith, but it's at 3.43. The 10-year is now above the 30-year. So that is inverted. So it's all reflective of a sort of a stagflation concerns. We've got high inflation and a lot of risks that we will get a recession as well, or come very close to it. So that's just, so it's just really a tough time, something that investors haven't faced in
Right.
decades.
Yeah, and nothing that's fun for us to talk about, but it's important for us to talk about. So before we go to these individual stocks, I feel like when you just are seeing such bad news out there and all of this negative macro environment that we're in, and a lot of people's portfolios taking big hits, it can feel easier perhaps to just kind of shut everything out. But even though it's difficult, it's important to continue to stay engaged during this time.
Yeah, you want to stay engaged because the market could turn. I mean, there will be a time, either whether it's tradable rallies or something more sustainable, and you don't want to miss out. If in 2009, after that long financial crisis, you don't want to miss out on the huge gains we had. Like, oh, okay, here it comes, because if you waited, you could be sitting up here. Oh, now it's just going to come back down. It can't work. Well, it did. It had an enormous run. The thing is that you don't want to take all this damage in the current crisis, but you still want to stay engaged so you can then take advantage of when you have a tailwind at your back rather than a headwind.
Exactly. Very well put there, Ed. Okay, let's get to those stocks. Why don't we? Let's first take a look at LNG, Cheniere Energy, up 2% today in some above average volume, off of its highs though. But this whole group moving today and just recently on news.
Yeah, it's interesting that today some of the LNG stocks, but especially LNG, had a positive session. There was a fire about a week ago at a major LNG terminal that is today the news was that it's going to be 90 days before it opens up, and then it'll be several more weeks or months before it really opens up. Well, that's probably good news for Cheniere Energy because it has an export terminal. Domestic natural gas prices, now that there won't be as many exports, domestic natural gas prices plunged 16%, while LNG prices around the world are going to skyrocket. So that should be good for at least Cheniere Energy. Obviously the market's not great. Technically, one positive thing is that it actually undercut the low on Monday. So it bounced back. So, that could shake people out. Maybe you actually get a double bottom from that 150 area, or it's just a shakeout, however you want to look at this recent pattern, that's sort of messy, but
yeah, I drew that bad. That's
no, but it's also, you could look at the consolidation even further back if you wanted to. So it depends on how you look at it. I mean, it's not, but in any case, it's that could be a little bit of a shakeout. So if it does bounce back, there's still a lot of positive fundamentals that are going to be coming in as it really supposedly is going to start really making money in the next few quarters.
All right, one to keep an eye on in the energy space. Let's also take a look at Dollar Tree, DLTR, which now has a cup with handle on the chart. We did see a little bit of supporting action yesterday with it closing in the upper half of its range, closing range of 64% yesterday, even though it was a down day. So it's holding right around its 21-day line, but it has the 50-day and that 160 level to contend with, even though we are seeing that RS line blue dot. So that's positive.
It's a positive. And there's a lot of things. One reason to show this is that, well, one, you want to look for stocks with high RS lines, and that's what we're doing here. But it's still getting stuck below the 50-day line, and yet the RS line is surging higher. I mean, the last few days, even though the stock has fallen quite a bit in the last few days, fallen in the last several days, but the RS line just went up and up and up. And there's also the fact, and you see that huge plunge and this revival in May, those are the kind of things. Stocks can look good, and then suddenly there's news hit. And when you're in a bear market, it can happen. Now, luckily for this stock, they had its own positive news. So it rebounded a few days after the target warning. But things like this can happen even with strong stocks, strong sectors. So on the one hand, you want to keep an eye on this. This one might, especially if it can get back above the 50-day line and market improves, this is definitely one to watch. On the other hand, this is also why you want to stay on the sidelines until things shape up.
Good thoughts there, Ed. Thanks for that. Let's also take a look at Li Auto, which has been on the move, carving the right side of a potential base here in a big day today, up 11%. It looks like we have seen quite a bit of blue volume here on the right side of this base, especially since its most recent quarterly earnings report, Ed.
Yeah, its last earnings report, which also came around probably, some other monthly EV sales for Li and Auto and others. So it wasn't the greatest, earnings report, but yeah, really on fire. We've seen this with a few other EV stocks in China. A few China stocks in general have been rebounding. COVID lockdowns fading, and maybe some new EV subsidies. So there's some positive. Yeah, in a different environment, you could have argued, well, it was breaking that trend line when it came above the 200-day line, and today it broke above its March highs, and so it's at the highest level since January. It's probably the highest close since basically that breakout failed way back when. But at this point, you'd like to see it set up again. Again, this is way extended from its 50-day line and even its 200-day line. So if you could form a long handle or maybe its own base in here now that it has a prior uptrend, that would be really positive. It's just that you should probably take a look at some of these China names. There's a whole lot of reasons why you should be cautious about China names. I want to make that clear. But you're looking around as you're building your watch list, you want to cast a wide net. And any stock that has been rising solidly for 5 straight weeks is one that you should be paying attention to.
Yeah, I'm right there with you, Ed. It's shown some power off these recent lows. Let's see if it can tighten up, set up, build a base, and form a trading range that we can manage risk properly from. Right now, like you said, we can't properly manage risk in a trade like we would like to do for our style. So we'll keep tabs on this one. All right. Well, that is it for today's show. Thanks so much for tuning in, everyone. Make sure you join us tomorrow morning for IBD Live, where we are joined by Jason Thompson, portfolio manager at O'Neill Global Advisors. Really curious to see how he's been handling his trades over the last couple of months and stocks that are on his radar for the next bull market. I know he has a big tech bent historically. He likes buying stocks selectively, rebounding or at their 40-week line. So who knows? I think it'll be a very interesting discussion with him. And he also is so great about talking about portfolio management strategies, his equity curve, lots of good stuff there. So looking forward to digging into that with him. But before we have that tomorrow morning, tonight, I'll see you on Twitter Spaces. My first time doing a Twitter Space, Ed. We'll have to see how it goes, but I'm co-hosting a market talk with Joe Fahmy, friend of the show, friend of IBD, and I think it should be a fun discussion. So 7 p.m. Eastern over on Twitter. Check out my profile for the link.
All
and
right.
Yeah. So it'll be fun. Hope to see you there, Ed. Maybe, you never know. Probably going to be busy writing a story, or just getting lots of clicks for investors.com. Like you're so great at finding all the information everyone wants to know. So we'll see you tonight and see you tomorrow morning on IBD Live. That's it, everyone.